You should see some slides up there right now. Say traders, trading pub, excuse me, trading pubs, trade-a-thon. Everybody see those? Okay. Hi, everybody. Let me comment. That last speaker, before he goes, Rich. What did you think of that? What did you think of that talk? I have to tell you guys, this is a great speaker. I just heard the last few minutes of it, because I just tuned in for this. But guys, that is, really what comes down to in the end. That becomes really the secret to trading. That kind of stuff. It's my favorite topic. At some point, everybody learns the charts. You don't see the slides, guys? You don't see slides? Yana, do we have? I have it on the slideshow tab. I got slides up. Is there some reason I'm forcing them over there? Some reason they're not? You got them, guys, now? Okay, got that, guys? Make sure you stay on the slideshow tab up on top, and then hit the X like you're going to exit, but hit reload. Okay? I'll give you guys a second to make sure. But great stuff what he was talking about, because at some point I say everybody can learn the charts. Not everyone does, but at some point it really comes down to your management, your psychology, your ability to actually make money from the charts that you find, because at some point, people can find charts that work, but they don't always make money from them. So it's a very, very important topic. But I'm here today. Yana, thank you for inviting me back. I was here a couple months ago. That was my first time. And when I was here last time, I did a little format that you guys really seem to love. I got a lot of emails, a lot of compliments. And I'm going to do a similar format. It's all going to be different. And I'm going to take the other aspect of this. While the things that Rich was just talking about to me are near and dear and extremely critical, before we get to the point that we can evaluate our trades and look at our psychology, we have to understand what it is we want to trade. Correct, everybody? We have to understand what it is we need to trade. And naturally, there are various approaches to how you develop an edge and to look at things to trade. For 15 years, I had no experience in the market before I started 15 years ago. I went for 4, 5, 6 months on my own and learned options, and then I, at some point, decided to sign up with Pristine. I did that because I was looking at some charts and I had some option positions open, and it was a fair amount of money involved in the market for me, especially after 6 months. And I had these positions open, and there came a point that I had to kind of figure out on a Friday afternoon once if I thought these things were going higher or not. And I had based my technical analysis on reading a book or two, and I thought it was relatively simple. There's support, and there's resistance, and there's trends, and okay, that's all easy. And when it came down to it, I had to admit to myself that I really had absolutely no clue as to where the charts were going. And I don't know if some of you have ever reached that conclusion in the past. So at that point, I actually went and I took my class with Pristine, and it's been a perfect fit for me. It's what I've done ever since. I trade equities. I've been doing it for Yana said 20. It's actually been 15. Maybe some confusion because our CEO, Greg, he's been doing it for 20 years. So what I want to do today is actually run through my trades from yesterday. Would you guys want to look at some charts, look at some trades, and take a look at exactly kind of how I operate throughout the day? Because that's what I want to do, is just kind of explain to you how to do that. Yeah, if you email us, I think somebody could dig up that talk for you. Okay. So let's run through and do that. I want to. I have till 10:15, so we should have time to go through this. I want to remind you guys, that you can lose money trading, and the slides I'm going to show you right now are things from past events. They're not recommendations for today or for tomorrow. Okay, I think we all know and understand that. Today's agenda, we're going to look at some trades. I want to talk about a couple different things. When we look at a slide, I am, first of all, 100% a technical trader. And after 15 years, and after evaluating and closely watching every tick of the market for 15 years, I reevaluated my position on fundamentals versus technical, and I've decided that I'm 110% technical. That's what I am. I'm not here to convince you either way today, but to me, the only way that you can objectively trade is to look at real information, and the only real information in the marketplace is on charts. I want to talk about not just what these trades are, but I want to talk about why they're mine. Because when you learn strategies, a lot of problems that people have are that any strategy that you show me, if I had any of you guys email me a strategy, I bet you that I could look on an intraday chart and I could find 100 instances of it. Correct, everyone? And that's the problem. If you have a strategy that yields 100 possible trades and you're not going to take 100 trades that day, it kind of gets to be a little bit of a problem. You know what I mean? So we have to fine-tune our strategies, and we call them make them our own. Make them so that they are restricted in a way that we can fully understand them, and as Rich was saying before, evaluate what we actually do. Okay? We have to talk about what actually makes them a trade, right? Everything that we do in having a strategy involves having some kind of edge, and we're going to talk about each of the edges that occurred on each of the trades we're going to look at today. And as we go along, I want to take a little quick break and talk about some of the truths about trading that I've learned over the years that I want to share with you. Part of that, if we have time, this will be at the very end. I want to talk a little about indicators, about back testing, about black boxes, about holy grails, and about reverse engineering. Because these are all things that tend to cause traders, excuse me, a lot of wasted time and a lot of money. And if I could share some of that with you, that would be great. Pristine, we are a worldwide leader of educating traders. We've been doing this for 20 years. Greg Capper, our CEO, is creator of the Pristine Method and author of many seminars, trading investment books. He's a 6-time winner of the Money Show Live Trading Challenges. For 20 years, Pristine has been training everyone out there, including virtually all of our competition. Just want to let you know who we are. And we're very proud of being the triple winner of the 3 categories we were nominated for last year, voted on by you guys for the best trading course, the best trading room, and the best newsletter. So that's an accomplishment we're very, very proud of. And that was just voted on at the beginning of this year for last year. Myself, I am a 15-year trader and trainer at Pristine. I'm currently, if you want to find me during the trading day, every day I'm running the Pristine Method Trading Room, which is a room where I'm in there. And all these trades you see today were all trades that were done with the room yesterday. And all of the trades were things that were discussed ahead of time. I'll show you how we did that. They're all things that if people wanted to play along, they could. And that's what I do during the day, is go through, trade, and explain things throughout the day to the Pristine Method Trading Room. I'm head of the Pristine Research Department, and also I am the author and instructor of 3 different classes at Pristine: Advanced Gap Strategies, Advanced Management Strategies, and the Wealth Building Program. Yeah, a matter of fact, Bob, I have nothing to sell you today, but I do have a couple things to give you at the end, and you can get a free. Matter of fact, you can get a trial for the people here today. We're going to give you a 2-week free trial, which is exclusive to you guys only. And you just have to email support@Pristine. It's a special deal, so you can't go to the website and get it. Pristine.com. Okay? There you go. Ray's got it there for us. All right, guys, let's start off with what we do. First of all, preparation is key to me. I believe that it's very, very important to be extremely focused. Okay? We have to be focused throughout the trading day. There's 2 ways to be focused. You can be focused by only looking at 1 or 2 different things. And that's all you ever look at. People who do that maybe trade the market itself, or they trade 1 or 2 symbols. And it is a good way to be focused. It achieves that. It's not my personal style, because if you stay focused and you don't look at other things, you're never going to catch the great gapper that day and the great daily chart that occurs. So I like to start with a wide net up on top, I call it. And I will prepare for the market. I'll look at usually upwards of 1,000 symbols between daily charts, hourly charts, and the gappers that morning, and boil it down to what I call a watch list. And you're looking at the exact watch list in front of you right now that I give every day to the Pristine Method Trading Room, every single day. Okay? In there is a longer term watch list that doesn't change all the time, that changes every couple of weeks or so. And then in there is also a daily watch list. Now the daily watch list could be used for swing trading, for holding things overnight, or also it's very, very productive to use that list for intraday trading, because if you want, by the way, we are going to get some charts in just a couple slides here. If you want to find a great intraday trend, wouldn't you agree, everybody, that starting with a great trend on a higher time frame will yield better results? Isn't that true? If big money is buying a daily chart, if it's moving up day after day, the odds are that intraday pullbacks, consolidations will continue to go higher on the intraday pattern. Would you all agree with that concept? By the way, feel free to comment, ask questions as I go along here. I'll try to get to all of them that you can. Guys, how's the sound? Is the sound okay? Somebody saying they have an echo. Sound 1 to 10? I'm in this type of room every single day. The sound is usually good. Great here. Okay, all right. You might want to try just rebooting there if you have any kind of sound issue. So then also we have the gappers every day. We call them gappers. These are stocks that are gapping up. And naturally every day there are hundreds of stocks that gap up. And I usually whittle it down to a handful of stocks. Now, the gap list is critical. I know a lot of people look at gaps, and they look at them very differently than I do. We have a very, very strategic, matter of fact, I teach a class called Advanced Gap Strategies, where we have just a very objective, strategic 5-point plan that we talk about for looking at gaps. And it's only the gaps that meet those criteria that I look at every day, because those are the ones that have a very good chance of moving in a direction that I know and giving me an entry that I can take. So this is a watch list I start the day with. Now, just so you know, 90% or more of the trades that I do the first hour come from this list that I give to the room at 9 o'clock in the morning. Sound amazing, sound unbelievable. Depending how you trade, it may sound unbelievable to you, but that's what I do. I believe that every trade you do should come to you, is what I like to say. If you find yourself starting the day like you're watching TV, and you're chasing things and you see things move and you got to get them, that is the wrong way to go about things, in my opinion. You need to have an exact plan. You need to know exactly what you want a stock to do for you to enter it, and you wait for the stock to do what you want it to do before you enter. Does that make sense, everybody? Does that make perfect sense? Because that probably accounts for 75% of at least newer traders' initial problems. Okay. This is the list that I give to the room. I'll do that right now. Here's how it breaks out for me. This is right off my personal trading platform. This is a Realtic platform that I've used for 15 years. And this is how I break it out. I put my daily watches here, green and red. So there's bullish and bearish daily watches. And I get my daily charts, and the hourly charts could be on here too. I have in my Realtic page, I have 120 of the higher volume hourly charts set up on thumbnails I look at every morning. And then I usually scan between, we have a scanner called ESP, between the ESP scanner, I set that to look at a huge list of stocks. And then I also personally go through another 500 to 700 and look at them by hand. And then those favorites come out onto here. Okay. The gap list I look at 8:30, 9 o'clock in the morning, and I go through and pull out the gaps that I feel are strategic. And then these four lists combine. Let me, whoops, let me get a little red dot out here. Can you guys see a little red dot right now? A little red dot bouncing around. Okay, so these four lists combine. And then in the morning, with the room actually, I go through and create what I call the hot list. And that is based on these four lists, and also based on anything that the members in the room may find that I like. I create a list of the most likely things to trade. So out of hundreds and hundreds of stocks, I end up with usually 10 things on this list, 10 or 12 things. These 10 or 12 things then I put on the thumbnail charts, little charts that start out being 1 minute. And by the way, just so you know my style, I am not a scalper. I'm not even sure what a scalper is technically. After 15 years, I still don't know what the word scalp means. I am more of a day trader. I like to find the high or low for the morning and hold for 2 to 4 hours or sometimes all day. More relaxed style, bigger moves. I'm not fighting for shares. I'm not hyperactive. I get in a trade, I go to sleep, I don't sit there and stare at it, okay? I do all equities, and I trade the market usually, and I average once a day. I'll trade the market, and I do that through the futures. I almost always trade the Qs, the NQs futures. Yeah. So that's just the market, because I'm staring at it all day as a bias, and when it gives me a perfect setup, I'll do it. And my most accurate trades are in the market because I don't do them all that often. Maybe 3 to 4 times a week, I'd say. Okay. Discussion points, it says, what is a watch list? What you should never do with a watch list. Okay, a watch list is an idea area. A watch list is not a playbook. Nothing in that watch list should be ever construed to be a play. It is possible that something on the bullish list I could end up shorting. It's something it's possible, something I thought initially was bullish, I could end up shorting through a failure pattern, through it doing something unexpected. See, trading is all about understanding and reading what's going on in a chart and reading what's happening to people. And it is possible that something that is just obviously bullish plays out and all of a sudden becomes bearish, and that can happen sometimes. So I have people sometimes, you know, they'll tune in the room, they'll get a bullish watch list, they'll tune out, and they'll say, hey, Paul, you know, 3 of your stocks on the bullish watch list fell yesterday. I said, yeah, you know what, they were supposed to fall. Because sometimes I'll have something on the bullish list that is bullish if and only if it goes over some area. In other words, the expectation is for it to fall. But if it, for some strange reason, did go higher, it would be an incredibly accurate play. Does that make sense, guys? They call it failure pattern plays. And they're the most accurate by far. They're probably 2 to 3 times more accurate than the typical strategies you look at. But it can fool people because sometimes something that appears to be bearish is something you end up playing bullish. Yeah, they'll help you out with getting recordings. I don't know how that works, but they'll help you out with recordings. Okay. So for each of yesterday's plays, we're going to go through, and what I'd like to do is, and you guys should love this because I'm not going to flash some plays in front of you and just move on. And I'm also not going to go back and pick a play from, you know, 2007 and one from 4 months. These are all the plays from yesterday, all of them, the winners and the losers, because losing is part of this. So this is everything I did yesterday. Now, last time I was on in the afternoon with you guys, and I did those days' plays. Obviously today I can't do that because the market didn't even open yet. So I'm going back and taking yesterday's. And I'm sure there's some people here that came and joined us from the Pristine Method Trading Room. Is there anybody here, just say hi, that was with me yesterday in the Pristine Method Trading Room? I imagine a couple of you guys are here hanging out. There's a lot of you here. Anybody? I'm sure there's somebody listening because I mean they were there. They see what we did yesterday, and yep. Somebody, please don't move the desktop sharing there, guys. Whoever's doing that. Okay. So I want to talk about the edge. You know, what was it that gave us? Now the edge always lies in the strategy, right? To some extent. But remember, like I said, a strategy that you have could end up having 100 possible plays a day. Do you guys agree with that? Hey, man, how you doing? Frank, yeah, how are you? Okay, Frank, you be the truth guy for the room here. If I say anything that's not 100% accurate, you tell them, okay? Do you guys agree with that? That even your own plays, if you guys have a strategy, I bet you if you explain your strategy to me, I could find 100 instances of it too. Hey, Rollo. True, everybody? If you have a strategy that you play, the odds are that if you explained it to me, I could find 100 instances of it on intraday charts, maybe not on daily chart intraday, right? And think about it, guys. If that's true, if you have a strategy you think is a cohesive strategy, it's giving you an edge, and you have 100 instances of it, who's going to decide, John? Who's going to decide the 5 trades you want to do that day? Let's say you want to take 5 trades in a day. I don't know what you want to take, but clearly you're not going to take 100, right? Who decides which of those 5 out of the 100 are you going to play? Anybody. Who decides that? You. But you, the intelligent you, like the intelligent person who created the watch list at 8 o'clock in the morning, or you, the idiot behind the keyboard, and I don't mean to you personally, but myself too, when the market's open, that makes really bad decisions in the heat of the moment. See, that's the point, is that the point of your plan and strategy is to isolate trades so that that idiot during the trading day, myself included, doesn't go off and do stupid things. And if your strategy allows for 100 instances, either you're going to take the first 5 or the 5 that you just happen to like, and that's what we have to avoid. So we want to talk about the edge, not only in terms of having a strategy, but what it is about that strategy that made it special to you. I want to talk about the source of the play. Where did it come from? How did I find it? I want to talk about the management a little bit in some of these. We'll get into some detail on that. And the strategy. I'm going to tell you what the strategy is, but saying what the strategy is, unfortunately, is not going to teach it to you. Why? Well, because I took many weeks, many months to learn technical analysis properly. and telling you the strategy. I'll gladly tell you what it is, and I'll tell you exactly what it is that made a trade for me. But unfortunately, you're not going to be able to walk away and trade it tomorrow. For example, for those of you who do technical analysis, I imagine it's most of this group, no matter where you learned it or how you learned it or what you do, you probably are all familiar with the term support, right? Actually, I did a whole lecture on this a couple weeks ago, just about this topic in general. Everybody familiar with support is? Everybody know what support is? Easy, guys. Easy topic. Easy topic, right? Support. You know that I could show you a chart right now, and I could ask you if there's support there, and half of you would say yes, and half of you would say no. I'd say, guys, let's agree on this. Is there support that you would play bullishly, yes or no? And half of you would. Well, it's another lecture. I do a whole lecture on this, going through. Because if you ever, well, it can be subjective, Maki, that's the issue, but you have to learn how to make it objective. Have you ever come down to a support level and then it completely goes right through it like butter? You've seen that happen, right? And then the next time the support level holds. See, there are different types of support. There are different classifications of support. There are different locations support can happen. The time from which support was last looked at and what happened between support now and the involvement of transfer supply and transfer demand. All these different things help you understand whether support works or not or holds or not. And most people ask them what support is, they say, well, it's something to the left. So there's a huge understanding. So when I tell you this play is based on support, you look at the chart and say, yeah, okay, I see that. But you have to understand every little nuance about what support is, or it won't work for you consistently, right? Right, well, John, I mean, not to like put in a plug for what we do, but that's what we teach. We spend a whole day talking about the various concepts of, or actually we spend 2 days talking about the various concepts of price action, the cycles they go through, what constitutes support and resistance, all those different things, okay? So it's more than can be answered with a simple line, obviously. It's a study, right? So I'll tell you what it is, but remember, it doesn't mean that you're instantly going to be, through the process of osmosis, understand at least what I'm thinking. Now, many of you may be great traders and know what you're doing. That's fine, but I know a lot of you are here trying to accumulate knowledge, and I want to give you all I can, but understand, I cannot teach you to trade in the next 60 minutes. And if I could, I probably wouldn't want to anyhow. Every concept I can give you is, I could show you a page and a paragraph in one of our manuals that explains it. I don't do anything that is not a pristine type of trade. That's what I learned 15 years ago. That's all I do. I've looked at and studied a lot of other things. And to me, there is nothing out there that is better than the pristine method of technical analysis, because it's just a great common sense combination of multiple things that works when you put it together. It works beautifully well. It gives you odds. It gives you probabilities. Okay? It says discussion points over there. The secret to trading is all seek. The secret really doesn't lie in any special strategy or in any special pattern. The secret really lies in you mastering what you want to do, understanding what you want to do, finding the patterns that work for you, and like the prior speaker said, is then really perfecting them through a process of evaluation all the time. Okay? What happened yesterday? 5 plays, 3 winners, 1 loser, 1 part loser. So what? Something that always cracks me up is we'll have people come into the room and they will say, well, was room average, what percentage of winners? And when I hear that, I immediately know, yes, we teach Forex too. I immediately know when somebody says that, I immediately know that they are a novice person, because you could have 2 winning trades out of 6 and make a ton of money. Everybody agree with that? And the truth of it is, there's a lot of different trading styles. You can certainly have an 80% batting average and make money, but the truth of it is most people have a high batting average and lose money. And maybe you're one of those people talking to me. And it's very easy to do. I could have a 90% batting average tomorrow if you wanted me to. I'd lose money, but I could have a 90% batting average if you wanted me to. It'd be very simple to do. But that's not the point. The point is to have a combination of strategies that make you money. That make you money end of the day. Right, exactly, Malky. I mean, you understand it, but not everybody does, you know. And it depends on your trading style. I'm more of a go for a bigger move, and I don't care about a stop out ever. So, but the bottom line, the trades yesterday, it made about 5 Rs. Now, 5 Rs are risky. This means a risk reward at the end of the day, a reward risk about 5 to 1. So, my risk amount, I made 5 times that yesterday based on trades, and that's an above average day. I mean, realistically, having 5 hour a week should make your living once you're set and you have your risk amount up there higher. So let's take a look at. I'm doing these trades not in chronological order. I'm doing them in order of my favorites. My favorites. Okay. The first trade yesterday was THC. Now, if you have your own charts up, you want to pull these up and look along, that's fine. I have a couple charts here to show you what happened. This is THC from yesterday. And the THC, this is the daily chart I'm going to show you first. I'm going to show you an intraday chart. And up here is the little post. I just took a copy of the post and put up here. This is what goes into the Pristine Method trading room. And again, those of you who want to trial and come watch us do this, feel free. But, in THC was on that list that you saw. Oh, no, this one wasn't. I'm not sure, I forgot. No, THC came from somewhere else. THC came at 10 o'clock and it came off the scanner, which is kind of an exception to what normally happens. But this came off the scanner because of this daily chart. This is, in Pristine Talk, this is a beautiful stage 2 Pristine buy setup in the making. It hasn't triggered yet. But one of my favorite concepts as an intraday trader is to go into this daily chart, and because I know this daily chart is going to bounce in this area, is find the bottom on an intraday basis. So using that support, and that is a very strong support area, though many of you may not recognize it or agree with me, that is a really very strong support area for a bunch of reasons on the daily chart. One of my big things is combining time frames. In other words, getting the power from one time frame and combining that with the entry from another time frame. The blue line is a 20-period moving average. Thank you, Chris. It's a 20-period moving average. I use this is a chart right off my screen. This is what all my charts look like. I have candlesticks. I have volume. I have usually 2 moving averages. I took one of them off for these presentations, a 20 and a 200, and sometimes a 40. And that's all I have. I never have a technical indicator up other than a moving average. And the moving averages are there for a guide to understanding trends. They're not support or resistance, or they're not triggers for plays ever. So THC was played at the second reversal time. That was a critical time. Intraday reversal times are a key part of my trading, and if you don't understand reversal times, you're trading at a huge deficit, because these make a big difference. It cannot be argued. The edge is multiple time frame analysis and intraday reversal times. And we'll look at the next chart in a minute as well, but it involved both the daily chart and then taking my entry off of a 5-minute chart, actually down to a 1-minute chart. The strategy was a daily PBS. It's a Pristine buy setup with a climactic 5-minute to minor support, and that's a minor support area on the daily chart, and the climactic 5-minute chart we'll look at. KJ, I'm not sure I understand what you mean by duration of candlesticks. Oh, these are 5. This is a daily chart. It's right up here. It says it. This is a daily chart right here. Every bar is a day. So this is a daily chart, and that's not really what I'm trading, but it's from whence the strategy came. All right, that's where the strategy came from in this play, because of the daily chart. This particular play has a nickname called a be the tail play. Be the tail play. Okay, that's the nickname of this guy. And AMS, advanced management strategies, I'm big on management. To me, management eventually makes or breaks every trader. And if you find that you have a majority of winning plays, or you find charts that go in the right direction, but you don't have any money at the bank at the end of the day, it's likely your management. AMS was used on the entry, which made for an extremely safe entry, and I'll show you what that was in just a minute here. It made about 2.5 Rs, so 2.5 times the money risked. Okay. How do you see what? Now here's the 5-minute chart. Okay. Now just to go back, this is the daily chart. Every bar is a day, right? And this is the daily chart coming into minor support. Now that came into minor support right at 10 o'clock reversal time on a climactic move down. Now, advanced management strategies, it gave me an entry. It's a special type entry we use. And even if you came down a 1-minute chart, you wouldn't see this entry. The entry in here you can see was 47.54 with a stop under 47.29. The low of the day, that was twice the distance below the low of the day. Twice the distance. Okay. Yana, we're having trouble with the slides. Guys, up on the top right, just go to that blue X and click on it, and then hit reload. Try that, Joe and Glenn. I'll give you guys a second, and see if that brings it up for you. Maybe there's a lot of people in here. Maybe we're just kind of maxing out on how many. Yeah, just a couple people started complaining. So I don't know something. You got it there, John, Joe? Hit reload. You should be good to go there. All right. So the play was taken right off of this bottom here. And remember that this bottom, guys, I want you to see what we're doing here. The low of the day I think was 47.40. So we're taking it just coming off the bottom with a good understanding of charts. Excuse me, I'm so sorry, I don't have a mute on this mic. And I want you to understand what it is. See on the daily chart? We're talking about taking the daily chart 10 cents off the low. Thank you. So that's the daily chart again. We're talking about taking that tail right off the low. And by the way, guys, this could literally be a swing trade entry. It literally could be, and often it is for me. And then we let it play out. Targets we're taking at 47.96 and 48.43. Now the first one was a fairly cheap target right there on the way up. And the second target was well into the later part of the day as that daily chart developed a really nice tail and made about 2.5 hours. There was never any stress. It never came even within 50% of the stop. It went nice to the target, keeping a 5-minute uptrend the entire time. And in this case, I manage, like once we're up in here, I'm bringing my stop to right down in here and continue to do such. Once I was up in here, I brought my stop down to here. Okay? This is a 20-period simple moving average. Now, to make a point, Dimitri, it doesn't matter at all. I know you're curious what it is, but if you want to use an 18-period moving average, I could care less. If you want to use a 17 exponential, I could care less. You want to use a 23 Quagmire exponential, I made that up, so don't look it up. I could care less. It's a reference point, is what it is. I know there's a lot of talk about moving averages and the advantages, and it's all garbage. I mean, it just doesn't matter. I mean, moving averages do not make your strategy. They do not make your entry points. So the exact one you use doesn't matter. It's a reference point. Look at it this way, guys. Look at it this way. Yeah, it doesn't matter. Look at it this way, guys. If you were out in the desert, picture this a minute. If you were out in the desert and every direction you looked was nothing but sand, you had no reference points. And out in the distance, you saw a round object. Would you have any idea how far away it is if you didn't know what the object was? Would you have any idea how far away it was if you didn't know what the object was, guys? You'd absolutely not. This is a fact when you're in the desert. It could be, it could be a big water tower thing that's 500 feet across and miles away, or it could be a basketball that's a few hundred yards away. You just don't know. But if I told you, hey, that big round ball, that's a kickball, or that's a basketball, then your brain would calculate about how far away it was, right? And it's the same thing moving averages. It's a reference point on the chart. So that when I'm down here, guys, see this right down here? I know that that's really far down on a 5-minute chart because here's the moving average. So it's just a reference point, okay? How? Well, just do the math, because if you have, see, we share size to a constant risk. So in other words, this stop had about a 30-cent stop in it. So if you were to risk $1,000, you'd have 3,000 shares. And if you calculate what that makes going to these two targets, half and half, target 1 and target 2 are 50-50, that's what the math comes out to. So if you're share sizing based on a constant risk, which is what you should be doing. In other words, every losing trade for me loses one risk amount. Whatever I'm risking on a trade, that's what I lose. So if you have a trade that is a 2.5 reward to risk trade, if the stock moves up the chart 2 to 3 times more than what the risk was, which is a term I think you're familiar with, you should make 2.5 times what you risked if you share size properly, okay? Sure, why not, Rox? If it moves $1, why do you care? I have to disagree with you, Rox. It makes absolutely no difference. You're probably a scalper, a micro scalper. What if you're playing Google? You may have a $3 stock. It'd be perfectly fine. The issue is how much does it move? I mean, this stock moved $1, to the second target or more. So it's perfectly justified. And by the way, I only needed a 15-cent stop technically. I added the rest of that stop on, which decreased my profit. But what did that do for me? Risk to reward? What did that do for me by increasing my stop? It made it almost impossible to stop out. So sure, you could go for a higher profit, but then some of those trades are going to stop out as you come down to retest this area. So this is my compromise point. This is what I do. You don't have to do that, but I like things that don't stop out very easily and yet get great. Guys, out the door, any of you have a problem taking a 2.5 reward to risk out the door? Anybody have a problem with that trade? Very, very, very few traders in the world would average that. So if that's above average, it's a great trade. All right, so that was the THC. And that was my favorite trade because it was my favorite strategy. My favorite strategy of taking a higher time frame support area and coming down to find a great little entry on a smaller time frame. You get the move of the bigger time frame. And actually, by the way, Rox, this could have been a swing trade. So 30 cents up for a swing trade would be microscopically small, right? And where this play came from, this one was not on my hot list, actually. This one actually came off a scanner. In addition to my hot list, I will look at a scanner. And it came up right here. I just put a little bit. This is the ESP scanner that I use during the day. That's a little picture of the cover of it, and there's different layouts that open up. And you see right there, THC was on this list, the intraday PBS list, and that's where I saw it. And at the time I saw it there, I looked at the chart and just loved what was going on. So that came off the scanner because I wanted to show you where these plays came from. Okay. Quick comment before the next slide. Chart patterns. Why? It's what gets the odds in your favor. I'm just going to read this. I don't like reading things, but this is, I phrased this kind of perfectly, so I'm just going to read this. I've been sitting in front of the market every minute for almost, actually it's almost 15 years. I don't know why I said 14. In order to make money, I do whatever works. If you've not discovered this fact yet, listening to news or researching fundamental data is not only a waste of time, but it actually is very detrimental. Don't yell at me if you don't disagree with that, but that is more than an opinion, in my opinion. It can give you an incorrect preconceived bias and ruin your trading, but that topic is not for today. Technical indicators have a very limited role. They can be used for scanning or to filter out or to look for certain price action, but they should never be used to base a strategy on or a basis to enter a position. They simply don't work. Okay, they simply don't work. There are thousands of technical indicators out there. If any one of them worked, I would use it. I have nothing against technical indicators per se, except for the fact they do not work as a strategy to enter a trade. Now they're great for scanning. You want to look for things above or below Bollinger Band, but all these concepts, the moving average crossovers and blah, 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 and MACD above and below and stochastics, none of that stuff works. It just doesn't work. It's great for a filter, it's great for a guide, it's great to eliminate trades, but don't base your trading on it. It's a shortcut that people are drawn to because people like to sell technical indicator packages that never fail, but they simply don't work. The technical indicators are simply taking old price action, doing a mathematical formula to it, and coming up with a new number to throw on the chart, and it doesn't help. Okay? Next trade. My next favorite trade, which of course was a winner or wouldn't have been a favorite trade, was SanDisk short. Now this is a short play. This is the daily chart again of SanDisk, and the daily chart was a very, very strong chart. Wide range bar beginning a move, 92 days up, and then wide range bar ending a move. The way we talk, that ends a move. We then come down, and this is a retest and failure pattern on the daily chart. It's a pattern that we know and we love. And once again, I use the daily chart as a guide, but I actually came down to the hourly chart to find this. Now that dip on the daily chart, here it is on the hourly chart, came back and hit this prior high right in here. And that is based on the daily and the hourly chart in combination, that does become a significant resistance area. So based on that resistance, I came in to short that. The SanDisk was played over lunch. This is the perfect time for some trades. Somewhere there's a notion out there you're not supposed to trade during lunch. I don't know who started that rumor. Lunch is a time where most traders lose money. But if most traders are losing money, what do I hear? If I hear most traders are losing money, what do I hear? Not short necessarily, but somebody else is making money, right? It's a zero-sum game. So and this is one of these games where 90% of the people lose to 10% of the people. It's the way it works. So there's money being made over lunch. You just have to know what to be doing, right? You have to know what to be doing. These are the type of things you do want to do. SanDisk went up to challenge its prior high. You know what it did? It broke above the prior high. What do you do? What do you do when it breaks above the prior high? You go short in this case. You go short because this pattern is a strategy to be shorting, and that becomes a failed breakout. It gives us a perfect entry for what we want to do. So the edge again was multiple time frame analysis and intraday reversal times, being lunch in this case. The strategy was hourly major resistance. I'm using abbreviations to save space. Hourly major resistance with a lunchtime failed breakout. The entry was a pattern failure entry. It starts to get a little complicated here, but I will. The entry was actually based on the small time frame intraday uptrend failing. And this trade, you can see here's the 5-minute chart. This short right here is right here on the 5-minute chart. And this was up 4 hours at one point. Now, I was going for a big target, so I wanted to let this pivot. I ended up trailing out for 2 hours because I ended up maxing it. At that point right there, and looking back, it probably should have taken half there, but I ended up trailing it right there over that line as that was the low. I felt it could go lower down to this area right in here on the hourly chart, but still a good trade, just under 2 hours out the door. Questions? Short, boom, boom, boom. Okay. This guy's going to ask me a question here. What gives you the right? Look at the 5-minute chart, guys. 5-minute chart. I shorted right there. 2 risk units, Sam. You know reward to risk, right? If you risked 20 cents and went 40 cents. If you risked $1,000, you made $2,000, right? Look at this comment up here though. This little guy's asking me, what gives you the right to short an uptrend? See that should be AN uptrend, not and. This 5-minute chart's an uptrend, right? The cardinal rule of trading. Follow the trend. And by the way, that's a great rule. One of the few rules. Hey, Sam. One of the few rules that makes sense. What gives me the right to short that uptrend, everybody? Just want to make that clear. Was I shorting an uptrend? I never trade them. You can, Jonathan. It's just another symbol to trade. If it's set up one day, I would trade it. I mean, I don't pay any special attention to trading that per se, but you can. What about this, guys? Yeah, I'm not shorting an uptrend per se because I'm not playing that chart. See, I'm playing this chart. And this has become a major resistance area, which means that this chart is no longer in an uptrend and it's shortable. Again, it's strategies. It's understanding your strategies. Your strategies allow you to do certain things. Your strategies will say when this is acceptable to do and when it's not acceptable. Based on multiple time frame analysis, based on a retest and failure pattern on the daily, which is a strategy we teach, based on the type of major resistance that was formed on the hourly chart, this becomes a sideways pattern in shortable, not an uptrend anymore. I simply come down to this time frame to accomplish my job of getting the entry. Okay? Right, Orville, sort of, yeah. But it is very critical. You don't want to go against the trend, and I'm not in these cases. Guys, anytime you go long on a pullback, you are going against the trend of smaller time frames. 100% of the time, not sometimes, not maybe, not occasionally, but anytime you go long on a higher time frame, you're going against the downtrend of a smaller time frame. Isn't that true, everybody? 100% of the time, right? Everybody agree with that? 100% of the time. So you have to understand what it means to be playing the trend. What matters and what doesn't matter. That's all stuff that you have to learn through your strategies. All right, another quick little blurb here, another word of wisdom slide. What gets the odds in your favor? We believe works in learning is to read where prices are really going. Let me say that again. What we believe works is learning to read where prices are really going, where they're really going. There's only one truth in the market. You know, guys, all the stuff, the talk, Wall Street and lies and corruption, and it's all true probably. I don't know, it probably is. I think most of it's true. But there is one area where there is no lying. There's only one area. And that is that when a stock is bought and sold, that it hits the tape, as we still call it, and it prints, and that print becomes a chart. And that is one area that still cannot be any lies. CEOs can say whatever they want, analysts can say whatever they want, CNBC can come on and say all the stupid comments they want, but if the prices are going up in a certain type of pattern, we know they're going to continue to a certain point. And that is what technical analysis is all about. Every time a transaction occurs, it hits the tape, and that becomes part of a chart. A chart cannot lie. A chart tells us where the big money is doing. It's kind of funny because sometimes I hear people talk about having to fight the people in the market and to be able to beat the big guys. Is that what we do? Is that what we do? It's not what we teach to do. We teach to be like, what do you call those little things? Grab onto whales and swim around with them? What do you call those things? The little, the symbiotic relationship, leeches, pilotfish, yeah, remoras. We want to identify where the big money is going and just follow it. Just go with them. Say, we're not going to fight you. Let's go with. It's just you pave the way and we'll follow behind you. Okay. A chart tells us where big money is going. Big money is not chasing stocks all the time. That is the secret. Find chart patterns that are screaming at you, that tell you where they are going. Most never learn this. Guys, the idea of technical analysis is not to be able to pick up any chart in the world and to make money from it. Yes, you can make great comments about it, you could teach about it, you could say what happened in the past, you could say if this, then that, but most charts you pick up, you're not going to be able to make money from them. You have to look for those charts patterns that are unique, that scream at you, that tell you, yes, I'm going higher, yes, I'm going lower. To find chart patterns, you need to learn strategies. There are certain patterns that repeat themselves over and over, and there are many price actions that are very readable, just like reading a book. When you find consistent patterns and learn to trade them, you're trading with a strategy and now have an edge. If you've not discovered this yet, you will. Does this slide make perfect sense to you guys, everybody? Does this make just perfect sense? This is what I do every day, day in and day out. It just makes perfect sense to do this. The next trade, the third trade, my third favorite trade, LVS short. Notice so far, two of the trades are short and one was long. It was a neutral day in the market going sideways. LVS was a short. There's the post that went to the room. It was based not so much, this is actually what we call minor, that red line is not really the way I'd like to have drawn it, if I could take it back, but this is really called a minor resistance area. And the minor resistance areas are stronger than major resistance areas. Yes, Jim, I do, usually 3 to 4 times a week, just the Qs, or sometimes the SPY, the NQ or the ES futures. But it wasn't so much that this resistance area was key, it was how it got there. How did it get there? It's a downtrending stock that had an all-day rally and then a quick morning flurry. These are patterns that we know. Okay, the edge was reversal time, intraday, and pattern failure entry. The strategy was a climactic run into major resistance. And actually, that's a typo. That's minor resistance. My bad. That's minor resistance. Small m, capital R. The entry uses a pattern failure entry, and it made about just over 1.5 times the money risk, 1.5 R's as we call that. Let's take a quick look at the, in this case, the 1-minute chart. Now, again, what we're shorting here, this is a 60-minute chart. It ran all day, it gapped up, and then it ran like crazy. How long do you think it took it to run this huge bar? By the way, this is a bigger than average daily bar right there. How long do you think it took to get there? 1, 2, 3, 4 minutes. 4 minutes. These flurry patterns into resistance often make good shorts. Now you have to understand what you're doing. I look for wide range bars all the time. This is called a wide range bar. Okay, it's a way bigger than average bar on the daily, on the hourly, on the 15-minute chart. These are powerful, but they can generate they're the root of many different strategies. Many times, most of the time, a bullish wide range bar is the beginning of a bullish strategy, right? So you have to know the difference. In this case, it's not. In this case, because it followed a whole day of trading and because it's that 5-minute flurry that happens first thing in the morning, it was a source of a short. So it came in here and shorted the 1-minute chart. You can see the numbers here: 74.43, stop over 77.76. Target 1, target 2, 74.06, 73.65. Actually, those numbers are at. It was under 74.44, stop over 74.45, so at 43, at 76. And the entry in here was a pattern failure type entry. It was it's kind of a combination. It is a transitional 1-minute sell setup, but under that green bar, regardless of how it's set up, was going to be my entry, and ended up being actually a transitional sell setup. And the stop reverting back to the high of the whole pattern. And then we fall, and this is a typical transition. It comes back, but it can't get over the high because we already saw it fail to get over the high ones. Boom, and then we start bleeding lower. And as it bleeds lower, we manage it properly and try and get it down to get to a target area. This play also came off the scanner. Now this is fairly rare because I said, 90% of the time my first hour plays come off the hot list. This one also came off the scanner. Now part of the reason was because it was an awkward day yesterday. If you notice, both the QQQ and the SPY gapped down to support. The Qs rallied like crazy, the SPY fell. They were in different directions. It was an unclear day. I didn't have great watch lists yesterday. A couple things were good. So I was looking at the scanner more, and again, this thing came off of the scanner. You can see this showed up in the morning at some point at a 9:45 wide range bar scan. And the scanner tells me it's a wide range bar. I pull it up, put it on my charts, and say, hey, that's a strategy I know, and it's a play. Okay? Target 1 and target 2. Target 1 was actually 74.06. Target 2 was 73.56 and was taken at 73.65 as we trailed it coming into the target area. Okay? Domingo, volume is a critical element to strategies, Domingo. You'll see again, for those of you joining late, this is the chart right off my screen. It has candlesticks, critical. It is volume, critical. Candlesticks and volume are all you need to trade the market. I like to have a moving average on there for reference, and that's all that I have. However, your statement is not necessarily accurate. Volume is not critical for a trend per se. Volume has critical roles. There are two really key roles that we use volume to make money with, and there's a whole bunch of things you can have nice cocktail conversation about. But there's really two critical things that we use volume for. And really determining a trend is really, I'm not sure what you mean by that. You could be right, but I mean just an uptrend continuing is not based on volume, no. Volume for targets often, yes, often it is. If you notice on SanDisk, like for example, I actually walked away. Let me show you SanDisk because you have a great comment, Domingo. Remember on SanDisk I said I was kind of sad I missed what should have been a 4-hour target because I wanted a big target, but nevertheless if I was sitting there, see this right here, what happened? I actually walked away for 20 minutes. It was lunch and I walked away to do some things. I didn't know SanDisk could drop this quick. You see what happened here? That puke bar and that volume, you got to take that, and I wasn't sitting there. So you're right, that told me that was the bottom for the day, and it was, and that's why I quickly got a trail stop down when I got back. But I gave up some profit on that by not sitting there. But you know, sometimes you make profit by not sitting there, right? Because I may have taken it way up here, if I was sitting there. So that's an excellent point, Domingo, yes. All right, so on to, where are we? Oh, did we just finish LVS? Where am I? Yeah, just finished LVS, right? Any questions? We good? All right. A couple more comments and then 2 more charts to do. I did my 3 favorites, and they were favorites because they were winners. Then we're going to look at the 2 trouble charts for the day, the 2 losers. Most traders, technical analysis, the problems. Look at this slide real closely and see if it rings any bells with anybody. Problems with technical analysis for most traders. They never really try to learn it. They just don't. They think it's simple. They think it's easy. I'm not going to learn it. Or maybe they just read a book or something, and that's all that there is. They read a book and they're done. They think that's good. For those who try to read it, they think a book or CD is all that's needed, right? It's just like I want to be a neurosurgeon, or I want to do plastic surgery, I want to be a heart transplant doctor. Let me read this book this weekend, and then I'm going to operate on your mother on Monday. How does that sound? I see some of you guys commenting on the market because the market's open. Be careful about alleged breakdowns going into 10 o'clock, guys. I see somebody saying the market rolling over. I'll bet you a nickel that you just set the low for the morning sometime in the next half hour. I mean, just be very careful. We are set up in a way that we should be bleeding lower in general in the market. I mean, just in general, we should be bleeding lower based on the chart patterns. But be very careful about ever trying to take a 10 o'clock breakdown, because if you go back and look at the chart, the last 19 out of 20 have failed to do that. So the problem with technical analysis, those who take it more seriously often get one of several hang-ups. Now what I'm saying here is people who do take the time to really learn and understand, you know, the secret to trading, to understand the charts, to understand what to trade. A lot of times these people that do try and learn, they get several hang-ups. For example, maybe they take a class like they're supposed to do, but maybe they never learned the class properly. There's so many people that I've seen who allegedly have taken some education, and they can't really regurgitate one concept back to me because they've never really understood it, or maybe they learned it and forgot it, or maybe they never learned to apply it right. I mean, you learn something in a classroom, and this is very technical stuff. I'm not saying it's super hard, but it's not easy. And then you go and you have to apply it in the marketplace all by yourself sometimes. At Pristine, we don't make you do that, but it's very difficult to say if you do something, did you even do it right? Did you do it wrong? If it doesn't work, do you know why it worked or didn't work? These are the problems with learning this stuff. If you did it wrong, is it just one of those that didn't work? You know, they're not all supposed to work. But who tells you that? How do you know? If you're learning, right? If you're learning, to make a terrible correlation, if you're a heart surgeon and you read a book over the weekend and operate on somebody on Monday and that's all the knowledge you have and the patient dies, how do you know why the patient died? Maybe the patient wasn't savable and he would have died no matter what. Maybe it's some grave error. Maybe he did some little error. How do you know? Who's there to tell you? These are the problems people have trying to learn this. And for those who make it this far, most never get beyond a certain level. They stop because they feel that they've learned technical analysis well enough to make money. Guys, there is so much to understand. It's not hard to learn, but it's just so much information that's available there if you listen to us be in the room, or even today maybe. Hopefully today I've said things to you that maybe if you're not that skilled in technical analysis, that open your mind to the possibilities of what's out there. Many people don't realize how good the Pristine method is. They get stuck on one concept. This is a favorite thing of mine. A lot of people get stuck on one thing. They look at, you know, support or resistance, and that's all they look at. Out of the dozen things that you should be looking at, putting together and coming up with a final answer, they look at one thing only, and they don't know why it doesn't work all the time. You can't look at one thing in a vacuum. Okay? Quick look at your comments here. All right. The next trade was actually the first trade of the day for me, and it was Zynga long. This is the daily chart of Zynga. A couple days back, it had formed a climactic type bottom and bounced. And that's really all there is on a daily chart to look at that's of any use. And then on the 15-minute chart, we had consolidated a nice base, and these are the support areas I like to play. And actually, I played Zynga right here, just the opening minutes, and it stopped by a penny, and then went on to make 2 or 3 R's. But I did stop out of it. I was a penny off on the stop, and really, it wasn't the stop; it was my entry. I was not happy with how I ended up entering this. I actually put it down as a mistake. I used a very low threshold of entry, taking it over a 3-bar pattern rather than waiting for the shakeout that happened here, and that shakeout took me out by a penny and then it went higher. Okay, guys, if you're having trouble with the slides, I apologize. I don't know what's going on, but just hit the blue button on the top right and hit reload. Well, Zynga was a loser for me. It was my one loser of the day yesterday, so I lost 1 full R, 1 full risk unit. Okay, it was a loser. The potential where it went to was about 2.5, but I wasn't in it because that was my loser for the day. I actually, it's not that often I do that, but I put it down as a mistake because I actually was too impatient with the entry, which usually isn't me. I got in, it shook, took me by a penny, and I was on to something else at the time. I didn't look at it again, and it went on to be an okay trade. It wasn't super great, but it was okay. So this was a losing trade for me. Not much else about it. All happened very quickly in the morning, and that was it. It was in and out. And the next trade was eBay. eBay, I like the eBay trade. It never really made a lot of money, even at the best, and I ended up trailing out of it for a partial loss. I lost about a third of an R. Let me show you how this happened. There's also a very important concept on this slide I want you to take a look at. This is the daily chart of eBay. And, you know, I was looking at it, it was at the low of this green bar. I was looking at it as a bearish daily because this wide bar, a green bar, and then being under that green bar is typically bearish. Now this one fooled me. This is one of those that, wow, I was kind of surprised the daily chart didn't continue lower that day. One negative about it, it was still down 3 days in a row and somewhat extended on the daily chart, but this pattern normally would go lower. It didn't do it this day. But let's take a look at what the trade ended up being here. It was based on the 15-minute major resistance area. So we opened, and we opened at the prior day's low, so we ran higher. Here's the 15-minute chart. So I was shorting this run into resistance up in here. Everybody see that? That's a major resistance area and a downtrending pattern. And it worked. I mean, it held for a long time. It just didn't drop enough. I just came a little bit from target 1 in here. I didn't quite get target 1, never generated any big profit. And I ended up, you know, getting the stop down and trailing out of it for a third of an R loss. Something along the way, though, that I want to point out, I teach something, because I've been doing it for years, called advanced management, to which there's very, very many aspects. Advanced management alters my entries on some plays. You saw that on the first trade, the THC. And it also has me managing my stops. Managing stops for me is one of the greatest money-making things I ever did. I make about 2 to 3 times the money I risk when I manage a stop. And that's what I did on eBay. eBay, the original post, as you see there, stop was 48.70. At 10 o'clock, I decided to let it go to 77 if it needed to. That would have risked an extra half of a risk unit. Knowing this pattern, and again, you have to make a technical decision, I felt that the additional risk of a half R was worth it to have the trade continue. So eBay did go over 70, which would have stopped it out. I did not stop because I increased my risk by 0.5. And then eBay eventually went to be green. I ended up trailing it for a partial loss, but it was a partial loss instead of a full loss. And oftentimes these trades go on to be winners. So this is another advanced concept, and it's something that, you know, you need to really learn the full ramifications of. You have to be very careful. You always have to have a hard stop in place. You always have to be managing things. You always have to make sure you're on top of it. But if I told you that that could prove to you that drinking a vanilla milkshake before you traded would make you an extra 2 hours a day, would you do it? And the answer would be yes, you would do it. As long as it posed no extra risk to you, right? As long as there wasn't a hidden risk. And some of these management things I do, they just simply, absolutely proven statistically make money for me, like crazy. So I do them. And there is no unlimited extra risk possibility. So there is no question about it. I do these. They are mathematically superior concepts. They're things you probably have never heard of, because they're things that maybe some people do. I've never heard anybody teach these. They're things that I do that I teach in a class called Advanced Management Strategies. So that was the eBay play. Negative a third. That's right, Rox. Loser. You have losers in trading. All the time. I actually shoot for half winners, half losers. I'm thrilled with that because my winners are almost always significantly bigger than my losers. So I'm thrilled with 50%. I actually try to keep it over 0.44. That's what I try to do. All right. Questions? We good? You guys enjoying this presentation? It's a good format. But it's important to be consistent with showing. I showed it, didn't I? I showed eBay was a loser. eBay was a loser. Every slide had it. It stopped. Full stop out 1 hour. I didn't put the. Oh yeah, so on eBay I put it saved 0.7. Yeah, so it was a negative point. It was between 0.3 and 0.4. I don't remember. It was around 1/3 loss. Yeah, I'm sorry. You're right. Well, I'm making it very clear these were two losers. I'm not hiding that. I just simply, you're right. I didn't put -0.3. It saved 0.7. It was -0.3. You're correct. Jim, there is no possible way I can be watching a market right now, right? How could I don't have my charts up, but I mean, I can't be talking to you and in any way, shape, or form be ready to do a trade. It's not even conceivably possible, right? I'd love to, but I can't. But what you can do is you can come for free, join us for a couple weeks in the trading room and see what it's like. We're giving you a couple weeks there because, and Ray, if you could post that again, because we want you to see what we do every day. And there, yes, I will be showing you everything, the watch list, the trades, everything going on all at once. So you can join us and do that all you want to, okay? The morning reversal times, number one is 9:35, and then 10 and 10:30 are the three biggies, big reversal times, okay? I don't think I understand your question, Andrews. Can you use your system to trade a chart that is manipulated like the Nikkei? You're talking about the Japanese market? I don't know what you mean by that. You have to explain that more. I don't know what you mean by manipulated or how that relates to the Nikkei. Yep, 10 days. Okay. All right, so we went through eBay, done. Last comments, guys, and then I want to show you one other thing. What gets the odds in your favor? Most don't understand what it is to have a strategy that gives you an edge. The strategies we use at Pristine are precise terms that can be found on any page in the manual as part of the Pristine method. The Pristine method is a very unique, objective, precise way of reading price action in a way that can greatly increase your odds of making money. But there are many who feel they know technical analysis because it's easy and it does not need to be taught. Guys, I've been doing this a long time, and if there were anything out there that were easier, better, quicker, faster, that's what I would use or do. Those of you that are with me during the day in the trading room, you see what we do every day, very successful. You cannot question if you come join us for a few days. I would invite you to do that. There's two things I want to invite you to. We do a class that's a 4.5-hour training class that involves all kinds of things about trading. Now, it's not going to teach strategies. It doesn't teach our Pristine method. That's, the classes, that's the heart of what we actually teach, the seminars that you pay for. But this is a class that is normally valued at $500, and it is all about all the other things about trading. You can read the screen there and see all the different things. Some introductory stuff, but then preparing your environment for success. Some good ones in there: share sizing and risk, how we make money, course of action, beware the pitfalls, placing order for a trade. We go through a lot of things that most traders never get taught, even when they take classes. The kind of things that fall through the cracks, and that's why I wanted to do that. And for you guys, you can join that for free. It's June 24th. Oh, Ray, is that a Friday? It's not. It's June 24th. Verify that, Ray, would you? I'm sorry. When you go to sign up, it'll say that day. I don't think it's a Friday. It's June 24th. I'm pretty sure. Yeah, it's a Tuesday. That's a typo. It's a Tuesday up there. Maybe I can cross that off even. Yeah, it's a Tuesday. June 24th from 4:15 to 8:30. It's a 4-hour class. It's all teaching, no propaganda, just pure teaching. I'm going to be teaching it, okay? So you're invited to do that. To do that, you can register for that right there. You see a link there for you. So that's something free you can do with us. We also invite you to come attend our power trading workshops that we do weekdays after the close. All a variety of different instructors teach those at 4:15 every day. You can attend one today if you want to. Just go to our homepage at pristine.com, and right on the homepage you'll see that. Also, for all of you here, you have a special invitation that no one else does. As a matter of fact, you can't go to the web page to sign up for this because it doesn't exist. You can get a 2-week trial to either one of our 2 trading rooms that are commonly looked at, the Pristine Method Trading Room, which is the one that I run during the trading day. And we also have a Pristine Proprietary Trading Room that is intended for our proprietary traders. For those of you who are looking to trade firm capital, Pristine is a program to do that, and that's the room where those traders are. And you're welcome to look at either room that you want. And that's a 2-week trial that you can have. Okay, guys? I also just want to remind you quickly that we have a preferred broker, Lightspeed, where you can get among the lowest commissions out there and great service. You can look at the phone numbers there if you need a new broker or if you want a broker in general. Call or email the numbers that you see there. And with that, guys, I want to know if you have any questions. I have about 2 minutes left over. If you have any questions quickly, feedback on how you like this today, thought it was useful to you. You're all here to try and learn what you can. And I think a lot of you are here to try and pick a path that you want to follow. I don't think any of you think you're going to learn to trade from seeing all these, but this is all great information that can give you a lot of added comments, point you in the right direction, maybe get you thinking the right way. But at some point, take the time to invest in yourself. And if you're going to do this for a living or for part-time money, prepare yourself properly for the job, okay? Doug, 15 years. I made money my first year. Actually, it was one of my better years, which is a fluke. Now, I'm not going to lie. I had problems on and off since then, without a doubt, but I always conquered them. And so 15 years ago when I started, I actually had a good first year, which is really weird. I know most people don't do that. Because I had been trading before that, and it's like I'm saying from the time I started trading equities with Pristine, because before that I was doing options on my own for about 6 months. Age, you were 20 years. We've been around 20 years, Doug. 20 years, trusted by everybody, great reputation. Look us up. Just great reputation. We have trained most every other major educator out there. If you look at their educating people, they're all Pristine graduates. Live charts? Well, Bruce, what will we do with live charts, though? Oh, you mean look for plays right now? Oh, yeah, we could have. Part of the problem, though, is I started at 9 o'clock, so that'd be something to do next time. Yeah, it was a good thought. I had a lot of comments that people liked. I did a similar thing last time because it was late in the afternoon, so I thought I'd do a similar thing. Ray, guys, problem with the link quickly? I got just another minute on here. They're saying that this link doesn't work. Or is it the right link? Could you explain to somebody, please, what's going on? Okay. All right, guys. I got to go. My time is up. You guys are a great group. Thank you all. You can always feel free to email me also. If you have a trade, even, you can say, hey, Paul, take a look at this trade. What do you think? I'm Paul at Pristine. Feel free to throw it out there to me, and I will, give you an answer back in a couple of days. Usually it takes me, but I'll get to it when I can, and we'll gladly give you any comments on it. Okay, guys? Thank you, everybody, and thank you, Anna, for having us here today. Take care, everyone.